At Vector Wealth, we believe there's a difference between having the facts and having a framework. Facts tell us specific truths. A framework helps us understand what matters. In this podcast, we'll share the facts as we see them, provide some frameworks for understanding, and then offer up tenets to our approach. First off, the facts. Markets are down from the highs set in February 2025, led largely by trade war discussions. We brush into bear market territory with a nearly 20% stock market decline. What's always remarkable is how quickly markets can move. In the past handful of days, we have seen the market's daily close down 5%, down 6%, then down around 2%, only to then snap back with an over 9% up day. Next fact, the U.S. unemployment rate is currently 4.2%. This is within historically average range. Next, inflation. The Consumer Price Index, CPI, is now at 2.8%. The Fed's stated target is around 2%. We're likely in that zone now. Next, the Fed funds rate. The reference rate for short-term borrowing is at 4.33%. This is down from 5.33% in September. Let's switch gears to now talk about frameworks. We'll define frameworks as we believe statements, or more broadly as foundational ways of understanding the world specific to investing and markets. Here are some of our frameworks at Vector. First, the time horizon framework. We believe that time in the market is more effective than timing the market. The past 5 days are a great case study. Big down days are commonly clustered near big up days. This tenet emphasizes patience over prediction, anchoring the growth-focused segments of a portfolio in long-term goals. Next, the real returns framework. We believe that the wealth is built by outpacing inflation. Understanding the difference between nominal returns and real after inflation returns keeps the focus on long-term purchasing power. The diversification is a disciplined framework. Diversification helps us prepare for multiple outcomes and, importantly, uncertainty. It also provides access to different sources of return. This year, for example, U.S. stocks are negative while international stocks, bonds, and commodities like gold are positive. Next up, compounding of growth framework. We believe that scarce productive assets like stocks tend to grow in value over time. Given time, those returns effectively earn returns. With a clear grasp of the facts and frameworks, we now turn to our approach. The first tenet is the most important, assured income. People living off their portfolio need to have some certainty, especially in the short term. The assured income segment is especially useful during periods of market decline, as we are not forced to sell long-term investments to fund income needs. Tenet 2, staging growth-focused assets within the longer-term buckets. By segmenting the portfolio in this way, we isolate the potential volatility of stocks into the later buckets positioned for compounding growth. Every day we're presented with data points, facts telling us which market indices rose or fell, and trade war updates. These facts are measurable, reportable, and often the first thing we see in the news. They matter, but they don't tell the whole story. We recognize that seeing markets drop 10, 15, or even 20% over just a couple months can feel jarring. It is. For some, this feeling can show up as a flight response. Will it be like this forever? Is it time to sell? For others, the question comes up, are markets on sale? Is it time to buy? Both of these are normal and okay feelings to have. Your financial life is yours and it's personal. We can't control the facts. We don't get to choose the interest rate environment, the unemployment numbers, or the inflation data. But we can control how we respond. Frameworks and a disciplined approach help us move beyond reaction and toward thoughtful action. At Vector, we pair your financial goals with an approach that endures. Thanks for listening, and as always, we're here to help.
Hey, thanks for listening to our podcast. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or